Hello, good morning, and you're watching Market Cafe on EG now with me, Vinny Motiwal, along with me, Sneesh as well. Saying a very good morning to you and a happy Friday to you as well. And markets seem to be a bit subdued as well, at least the global handover, what I'm looking at, nothing exciting, or are we expecting a green day coming in on the markets this Friday?
Well, Vinny, a very good morning to you. Happy Friday to you as well, and a very good morning to all our viewers. Let me quickly take you through the global handover and what happened in the US as well as the European markets. Now, stock futures were little changed in overnight trading Thursday as Wall Street headed for a losing week. Futures tied to the S&P 500 inched up very nominally, while Nasdaq 100 futures gained about 0.1%. And futures connected to the Dow Jones Industrial Average rose 29 points, so like a slight uptick over there. Investors bought up technology stocks during Thursday's session after a 3-day breather from the market rally, pushing the tech-heavy Nasdaq composites up almost 1% and shares of Apple to a new all-time high. The S&P 500 added 0.3%, while the Dow Jones Industrial Average lost 4 points, pressured by the shares of Boeing. Now, all three major averages are set to break multi-week winning streaks. The Dow and S&P 500 have lost 1% and 0.6% respectively since the start of this week, and the Nasdaq is down 0.4% on pace to snap an 8-week win streak and post its worst weekly stretch since April. Now, quickly shifting focus to the European markets then, and European markets closed lower on Thursday as the Bank of England opted for a more hawkish 50 basis point rate hike, and we'll talk more about this in detail later in the show. But the benchmark stock 600 closed 0.5% lower, trimming earlier losses of more than 1%. Banks dropped 2%, while autos decreased 1.4%. The index has posted decline in all 4 sessions so far this week. So this is what the global handover is looking like, not very positive coming in from both America as well as Europe. But Winnie, while this is on the equity front, why don't you tell us what crude and other commodities did?
Absolutely. And looking at the Brent crude oil prices, what I'm seeing this morning at least is that Brent crude oil has opened up a bit muted in trade, not anything negative, positive, not much of a move there. Brent crude oil is trading around the $74 per barrel mark. WTI crude oil is below the $70 per barrel mark. Let's not forget, overnight we saw a sharp plunge coming in the oil prices, and that it fell as much as 4% as interest rate hikes is something that outweighs the lower supply concerns, US supply concerns that we're seeing. Now, other than that, when you're looking at the Brent crude oil prices, yes, they're trading below that $75 per barrel mark. This morning, a bit of a steady move coming in with their worries in terms of outlooks for China's demand is still something that everyone's watching out for. The interest rate hikes in UK, warning about looming US rate hikes as well, are concerns that one is keeping an eye out on in terms of the prices for the oil. But let's move on and look at what gold is doing this morning as well. As of now, gold 1,924 rupees per ounce mark is what gold prices are at, and in terms of that, that's hit a new 3-month low in those hawkish commentaries that we've seen coming in from Fed's Powell. That was yesterday, but that continues to be something that is keeping other gold prices at the lowest levels in almost 3 months.
Absolutely, Winnie. So when you've got commodities and especially gold plunging, we can fairly expect equities to do well today in Indian markets, and maybe we might even get that all-time high mark on Nifty for what we've been waiting this entire week. But moving on, let me quickly take you through all the events that you should be keeping on your radar today. On the Dalal Street front, you've got annual general meetings today of Angel One, Shriram Finance, Sula Vineyards, so keep an eye out on all these stocks. Corporate action today, you've got FTSE to announce free float adjustment and Shilpa Medicare to consider fundraising plans. On the corporate action front, you've got Torrent Pharma, Raymond as well as Dalmia Bharat that will be trading ex-dividend today, so watch out for this. On other events, PM Modi will address Indian Americans, top CEOs when on his trip to the US, and on the IPO update, you've got HMA Agro Industries that will be listing today, so keep an eye out on all these cues to watch out for.
Surely keeping an eye out on all these cues today, but let's talk about more global news that has come in, and the number of people filing for the state unemployment benefits for the first time held steady at 20-month high last week, remaining elevated for the third straight week in the US. Now, this may be early indications of softening of labor market in face of Federal Reserve's aggressive credit tightening in the US.
Meanwhile, consumer sentiment in Britain hits its highest level since January last year. This as our households turn more optimistic about their finance and economy amid lofty inflation levels and high interest rates. The Consumer Confidence Barometer rose for the fifth month in a row at -24 versus last month's -27.
And talking about the Bank of England rising its rates, now shifting to this central bank's activity. This was a surprise move that came in from Bank of England that lifted its key rates by 50 basis points, mainly to tackle the stubbornly high inflation in the country. Now, UK's inflation remained hotter than expected in May as labour market conditions have tightened further. And in terms of food price inflation also has not yet peaked. Now, the 9-member Monetary Policy Committee voted in the ratio of 7:2 for an increase in the key rate to 5%, and the highest level that we've seen since 15 years and the biggest move since February.
Turning our attention to Turkey and Norway then, Turkey's central bank has hiked interest rates, almost doubling it from 8.5% to 15%. The bank said there will be further tightening until the inflation picture in the country improves. And meanwhile, Norway's central bank has also raised its key policy rates by 50 basis points to a 15-year high of 3.75%, with a prediction of further rate hikes in the months to come.
Talking about SoftBank Group's Vision Fund is actually now preparing to start another round of layoffs as soon as the week, following an approximate 30% reduction last fiscal year. Now, the layoffs will impact as much as 13% of Vision Fund staff, and the said job cuts will mostly take place in the United States. The cuts follow 5 straight quarters of losses at the Vision Fund, reflecting the tough environment for the technology investment.
And in some sombering news coming in this morning, all on board the Titanic submarine are believed to be dead after they ran out of their oxygen supply of 96 hours. The debris was found off the bow of the sunken Titanic, and according to search teams and the Coast Guard, the debris found at the seafloor was consistent with a catastrophic implosion of the vessel.
And in a historic visit that has strengthened Indo-US ties, PM Modi and President Joe Biden touted India's democratic values, saying it was in country's DNA while battling for peace and human rights in the light of ongoing Ukraine war. Remember, this was PM Modi's first state visit, one with full diplomatic protocol, and the two leaders addressed the media after their delegation-level talks and took questions from reporters. They hailed a new era of Indo-US ties, encouraging deals on defense commerce aimed at countering China's global influence. The partnership is stronger, closer and more dynamic than at any time in history. That's the word that came in from Biden when he spoke to the reporters at a joint press conference. A space deal has also been signed between the two countries, where India has joined the Artemis Accords for civil exploration. NASA and ISRO have agreed to joint mission to the International Space Station in 2024.
इंडियन अमेरिकन लोगों ने अमेरिका में बहुत लंबी यात्रा तय की है। भारतीय मूल्यों, भारत के लोकतांत्रिक परंपराओं और हमारी संस्कृति के गौरव से भरे हुए इन लोगों को अमेरिका के मेल्टिंग पॉट में निरंतर मान सम्मान मिला है। भारतीय मूल के लोगों ने अमेरिका के समावेशी समाज और अर्थव्यवस्था को और मजबूत बनाने में बहुत बड़ी भूमिका निभाई है। पिछले 5 दशकों से बदलते विश्व में उथल-पुथल के बीच आप लगातार अपने देश की और पूरी मानवता की सेवा में जुटे हुए हैं। आपने हर एडवर्सिटी को स्ट्रेंथ में बदला है, हर लॉस को रिजॉल्व में बदला है और हर चैलेंज को मिशन के रूप में लिया है।
As two great democracies, in the bustle of our work, India and the United States hear the cry and the call of destiny to take our nations and the world forward to a future worthy of our dreams, a future of greater prosperity, opportunity, liberty, equality for all, and for the good of the world. Because it's only when every person can grasp their fullest potential that we as nations can achieve our highest purpose.
I don't think either side has tried it hard enough to enter into a trade agreement. I think we've been concentrating on the individual nations on a bilateral basis, but which are much smaller in size. As of now, we are talking to individually, we're talking to the UK, and we are talking to Canada, which are reasonably in terms of their trade volumes, etc., size of the economies. But with the US, we have talked, initiated it, but not pursued it. And as you referred to, what happened during the Trump regime, that did put back a lot of things between India and the US.
What we are really watching, what we've seen, there's a lot of talk, defense deals, G414 engines, etc. But at the heart of the matter is how the US sees India, the place that US assigns to India in its larger economic plans. And when I say economic plans, it's because the Biden administration has turned the old Washington consensus inside out. In the old days, the United States believed in free trade, open markets, and things like that. But in the last 2 years, we've seen the Biden administration articulating its point of view, and its point of view goes 100% against what the Americans argued earlier. So now what they're talking about is industrial policy, innovation, meaning the US is getting back into the business of becoming an industrial power. It's always been an innovation power. It no longer talks of FTAs. For example, they now talk of bilateral economic arrangements.
I think we need to take a look at, there are two big pictures. There's the big picture, which is the strategic situation internationally, not just in the Indo-Pacific. Europe is in turmoil. China is getting not just assertive, but also aggressive. And between Europe and the Pacific, I believe the only country that presents some stability and hope of a partnership for the United States is India, because they have not yet mended their ties with Iran. It's going to be work in progress. And India, for other reasons, for the growth of our economy, for the democracy that we cherish.
It's going to be a partnership, which is the sort that the US has not been able to establish with India in the past several decades. The Russians have been good at that. The Russians have therefore supplied us Sukhoi aircraft, more or less lock, stock, and barrel. It has supplied us MiG-29s. It has supplied us nuclear submarine. It has supplied us other naval technology. It supplies us the mainstay of our ground forces, the armor, T-72, T-90 tanks, the BMP-1 and 2. So clearly, the Americans want to enter this field both to make money through the Indian market and to wean India away from dependence on Russia and military systems.
Those are all the latest details of PM Modi's visit to the US. But with that, let's quickly slip into a short break. Don't go anywhere. More news and updates on the other side.
Welcome back, and you're watching Market Cafe on ET now. As of now, SGX Nifty is indicating an absolutely muted flat start for the Indian markets, but Nasdaq, S&P 500, that didn't do anything exciting. Look at the Nikkei, that is trading with a cut of 1.7% as of now in the Asian markets. What is Hang Seng doing as well? That's the one to watch out for as well. Hang Seng as of now is also trading down almost a percentage rate as well. Keep an eye out of that one. Let's look at ASX 200. Where is that headed? ASX 200 is down a percent as well. So clear weakness is what we're seeing coming in even in the Asian markets. Kospi, that was something that was in the green previously in the beginning of the week, but as of now, yesterday also it was trading in the red. Today also, it is following the Asian markets trend and is down almost 0.7% in trade as of now as well. Dollar index is off the 1 month low. Yes, that's the one to watch out for as well. But SGX Nifty, absolutely flat start is what is indicated. For the Indian markets as of now, no good handover coming in from the US markets or even the opening in terms of the Asian markets as well. So yes, nothing exciting coming in on the D Street or an expectation, but always keeping an eye out on when Nifty is going to be touching their all-time high levels. Snehi, whole week that you mentioned that we were waiting for it.
Absolutely.
But actually, finally, is it going to happen today, and is it going to be a happy Friday on
Happy
the D
Friday
Street?
indeed, Winnie.
That's what we are watching out for as well.
Absolutely, SGX Nifty indicating a very muted, very flat start.
It could be as flat as it could be as of now. There's nothing happening there as well.
We can only hope of hitting those all-time high levels on Nifty. Good morning, viewers, and welcome back, and thanks for tuned to Market Cafe. Now, the minutes of the June MPC meet are out, and it was for the second time in a row that the MPC headed by the governor kept the short-term lending rate, which is the repo rate, unchanged after continuously raising it since the May 2022. Ankur Mishra filed this report earlier. Listen in.
Yes, Reserve Bank of India Governor Shaktikanta Das has made a strong statement against inflation in the MPC minutes which has been released. He has said that our job is only half done, having brought inflation within the target band. In fact, he has also said that we need to undertake a forward-looking assessment for the evolving growth and inflation outlook. All in all, you would remember that MPC had gone for a pause this time, and they had mentioned even in the Monetary Policy Committee meeting press meet, the governor has said that inflation is still a concern till the time it does not go towards the target band, that means the 4% target. Apart from that, the other Monetary Policy Committee members like J.R. Verma has once again opposed regarding the stance which has been taken by the MPC members. He has said that this stance is becoming more and more disconnected from the reality, and monetary policy is now dangerously close to the levels which it can inflict significant damage to the economy. There are other members who have spoken about the growth as well as inflation dynamics, and Shashank Bhide has said that overall growth momentum for this year looks a little moderate than compared to last year. Similarly, Ashima Goyal has said that the real repo rate does not rise. That needs to be taken care, and she said that it does not require the nominal repo to be kept higher for longer. That should be something which MPC should carry out. RBI Deputy Governor MD Patra has said that near-term outlook for inflation is relatively benign compared to last year experience, and monetary policy needs to be remaining in the brace mode. The other MPC member Rajiv Ranjan has said that our cumulative actions needs to be taken working in the right direction, and hence he has voted pause for this policy committee meeting.
Thank you so much for that. But let's shift gears and talk about the IT sector. And today we will be seeing that IT stocks are going to be in focus. Why is that so? Because Accenture reported its numbers, and we saw Accenture shares plummet as much in trade because of the Q3 numbers results that were reported of 2023, where they cut the guidance to 8 to 9%. Anisha Jain, my colleague, is here with more details on this on the phone line. And what are the Accenture numbers looking like, Anisha?
Hi. So yes, it's a bit of a muted set coming in from Accenture, but definitely not ugly, because if you look at the Q3 performance, the revenue is largely in line with expectation at $16.6 billion. Yes, the margins look optically lower at 14.2%, but if you adjust for the one-off, the margins also stand at 16.3%, which is 20 basis points higher than the last year. There's a couple of comments which are also positive. The very strong double-digit growth continues when it comes to the cloud vertical. However, having said that, BFSI vertical has managed to grow by just 5%, and North America, that's up only 2%. That, for me, is a bit of a worrying factor. Separately, I think the reason why the stock in the pre-market is showing a bit of a downtick is the fact that new bookings have come down. So last quarter, we had seen new bookings to the tune of $22 billion. That's sharply fallen to $17 billion. Yes, the company had pointed that in this quarter, the bookings will be lower, but it's substantially lower than what the street was working with. And then, of course, the final, nail to the is the fact that there was a downgrade coming in when it comes to the guidance of full year. As you rightly attributed, it was 8 to 10% earlier for the full year. That now stands at 8 to 9%. This time, the street wasn't expecting any cut with respect to guidance, so that's why a bit of a surprise or a shocker coming in there. But again, I wouldn't call it an ugly set given the headwinds that the entire sector is facing. It's par for the course. Consulting was a bit of a worrying factor, which was down almost 4% on a year-on-year basis, but made up by outsourcing. So overall, a muted set coming in, but not a very large negative at this point of time for the IT sector.
Absolutely. Thanks for those details, Anisha. But let's also listen into what the management had to say on their latest earnings report.
Revenues were impacted by lower than expected small deal sales, especially in strategy and consulting and systems integration, and lower than expected results in the communications, media, and high-tech industry group for the quarter. Revenues grew 5% local currency, driven by high single or double-digit growth in 7 of our 13 industries. While we've been highlighting the pressures in our CMT industry group all year, this quarter their revenue was lower than expected, with a decline of 8% in local currency. We delivered adjusted EPS in the quarter of $3.19, reflecting 14% growth over EPS last year. Adjusted operating margin was 16.3%, an increase of 20 basis points over Q3 last year, and includes continued significant investments in our people and our business.
Let's move on, and seems like there's more trouble inside for Byju. The EdTech major statutory auditor Deloitte Haskins has actually resigned due to the delay in the company's filing of financial results. Now, Byju has now hired BDO as the auditor. My colleague Anurag Joshi is here with more details on that.
That's correct. So Deloitte Haskins and Sells has resigned as the statutory auditor of Byju's. Now, this is a very interesting development in the Byju saga, because Deloitte Haskins and Sells was supposed to be the auditor that was going to audit the financial statements of Byju's for the financial year ended March 31, 2022. Now, those financial statements are yet to be released. Now, the Deloitte Haskins Sells has been replaced by BDO, and they will be auditing the FY22 statements. Now, in its resignation letter, Deloitte Haskins and Sells has mentioned that the financial statements for FY22 are long delayed, and that those statements were supposed to come out by September 30, 2022. Now, it's again interesting because last September, Byju's had released the FY21 results with a net loss of over about 4,600 crore rupees.
This delay seems to be really extraordinary because they had done multiple acquisitions, and consolidating multiple acquisitions and filing the result is something that may take time. But this is a well-known thing that you have done acquisitions. So putting more people on the job, accelerating it, working overtime, such delays are clearly is worrisome. Okay, right? Some amount of delay is understandable, but despite all acquisition, it is really troublesome. I mean, it seems to be more than just a revenue recognition issue. Again, on revenue recognition, it's quite understandable that auditors want to be conservative. They want to recognize in a way which is most conservative. And it's understandable that the founder and the entrepreneur wants it to be as aggressive as your accounting standards will allow it. And again, accounting standard, whether it's Ind AS or IFRS or US GAAP or Indian GAAP, each one will recognize it differently. So those are again par for the course. But such delay is not understandable. I don't know the exact reason.
All right, and a reshuffle in the top ranks at Tata Digital is underway, which runs Tata Group's super app New. This is what the Economic Times is reporting. And Shiv Charan Pulugurtha, who's the Chief Strategy and Business Officer of Tata New, has left just a year after joining the firm, even as the Mumbai-based conglomerate has hired Gopal Asthana as Chief Executive of its fashion business Tata Click, which has now been moved to Tata Digital, they said. Asthana, who's the former Chief Business Officer of Nykaa Fashion, is replacing Vikas Purohit, who had quit earlier this year and joined Meta. Asthana's appointment is yet to be formally announced. But with that, let's quickly slip into a short break. Don't go anywhere. We'll go more stock specific on the other side.
Welcome back, and you're watching Market Cafe on ET Now. It's that time on the show when you bring you all the stocks that are going to be in focus today on the back of news flow. And my colleague Ansh is here to give us more details on the list that we should be keeping an eye out on. Ansh, a very good morning to you.
Good morning, Vinny. So IIFL Finance would be the first stock in focus for today's trading session, as Board of Directors has approved to raise 300 crores through NCD with an option to retain oversubscription up to 1,200 crore. Apart from this, Wipro will also be in focus as company expands its presence in South Africa by opening a new office in Cape Town. MD of SBI, Mr. Swaminathan, has been appointed as the Deputy Governor of RBI by Central Bank. IndiaMart will also be in focus as Board of Directors has approved allotment of around 3 crore shares to existing shareholder in the ratio of 1:1. Board of Directors of PNB Housing has approved issuance of NCDs worth 5,000 crores. LIC Housing will also be in focus as company has appointed T. Adhikari as the CFO of the company. Moving on to BPCL, Board of Directors will be meeting on 28th June to consider raising of funds through rights issues. Lastly, Grindwells Norton will be in focus as company's final hearing for amalgamation at NCLT with its subsidiary PRS Permesel Private Limited took place yesterday. The court has reserved its order, meaning decision is yet to be announced. So these are the stocks that you can watch out for.
All right, watch out for all these stocks. They could be potentially buzzing in trade today. Thanks, Ansh, for all those details. But moving on then, credit growth is expected to remain robust, says Investec in a note. The brokerage sees FY24 credit growth in the range of 14 to 15%. And my colleague Harsh is here with all the details from the note. Over to you, Harsh.
Yes, absolutely. So credit growth in the system continues to remain robust. In fact, Investec believes that Q1 could clock a credit growth of 3.2% sequentially on the back of really strong credit growth closing in Q4 of FY23 as well. Q1 continuing to clock or continue to keep that momentum. And what channel checks also seem to indicate as per Investec is that the undercurrent with regard to credit growth is quite strong, and that has remained robust. Of course, the real question then that ought to be asked is whether the growth is at the cost of quality, and to that what Investec seems to be suggesting is that no, there is no quality being diluted to get this particular growth. So there's a strong undercurrent. What they're also suggesting is that if 3.2% is clocked in Q1 of FY24, you could see FY24 full year the expectations to be bumped up to 14 to 15% credit growth for FY24 as well, which currently stand at 12 to 13%. So you could see a 1 to 2% uptick with regard to that expectation for the full year of FY24 as a result of this higher expectation and if this higher growth rate is clocked. So Investec quite positive on that one. The other piece is on liquidity as well as deposit growth. Investec also believes that deposit growth is building up in terms of its momentum. 11% growth is what's expected with regard to deposit growth as well in Q1 of FY24. So slowly you're seeing that there's the liquidity pressures are receding, deposit growth is solid as well, and credit growth is good. Good news for scheduled commercial banks for sure.
Okay, thank you so much for that, Harsh. But also, let's move on and go across to Ashesha because she will be giving us more details in terms of the HCL Tech management meet that happened, in terms of what are the key highlights coming in when they met with the analysts. Ashesha, take us through those important highlights that we should keep an eye out on HCL Tech. Obviously, IT sector as a whole is going to be in focus because of Accenture's numbers, but especially HCL Tech, anything good coming in terms of commentary there?
Yes, the entire IT sector will be in focus thanks to Accenture results, but one stock in particular that will be in focus is HCL Tech, and that is because Macquarie met with the management of HCL Tech, and on the back of that they've come out with a note. First up, management says that they see structural growth opportunities to grow in double digits over the next 5 years. As far as revenue guidance is concerned for FY24, they've reiterated their revenue guidance at 6 to 8% in constant currency terms for FY24. Meanwhile, talking about margins, they continue to target returning to pre-COVID EBIT margins of 19 to 20%, but for FY24, they've reiterated their EBIT margins guidance of 18 to 19%. As far as artificial intelligence is concerned, they say that they see AI adoption as an opportunity, but they think widespread enterprise adoption is 12 to 18 months away. They've highlighted 5 key medium-term objectives. First up, we'll talk about their growth opportunities, where the company says that they expect to be the fastest growing firm in terms of organic growth as compared to its peers. They want to get back to their pre-COVID EBIT margins of 19 to 20%. They want to improve their ROIC by being very capital efficient. They want to continue to return at least 75% of their net income to shareholders, and as far as free cash flow is concerned, they also say that they want to focus on generating operating cash flows to the tune of 120% of their net income for the next 2 years and 110 to 115% beyond 2 years. So strong commentary coming in from the management of HCL Tech, on account of which the stock is in focus today. Alright, HCL Tech in focus on the back of its management meet. Thanks, Ashesha, for all those details. Let's get a move on then. And FII flows turned net positive for 5th consecutive sessions in the first half of June. Financial services see the highest inflows, while software and services saw the highest outflows. My colleague Somit joins in with more details on this. Somit?
Well, FII flows was positive at around $1.6 billion, and this was the 5th consecutive fortnight of continuous inflows that we have been seeing in the Indian market. For the last 6 months, if you see, the total inflow has been close to $7.36 billion. Now, among the sectors seen the highest inflow and outflow. Firstly, on outflow side, if you see the software and services, utilities and media and entertainment, I have seen outflows for the 3rd straight fortnight. Material sector, now that reversed the 6th consecutive fortnight inflows and saw a large outflow led by metal and the chemical sector. Now, the largest inflow on the other hand, if you see, was seen in the financial service sector, and this was for the 5th consecutive fortnight. Automobiles and components also saw an inflow for the 5th consecutive fortnight in the first half of June 2023. Capital goods sector, now that sector saw an inflow of close to $612 million, and this was the largest inflow seen in the sector in the last 2 years. Now, a large chunk of this flow would have gone towards aerospace and defense, given the up move that we had seen in the share prices, and most of these flows could have been in Hindustan Aeronautics also, because this stock was up around 20% in the first half of June 2023. Now, though FIs have continuously remained overweight on financial service and have been putting in money in this sector, if you see, the weightage has actually come down of FIs on the financial service sector by around 19 basis points. For all other sectors, if you see, FI stance has either increased or remained constant. Its financial is the only space where the weightage has actually come down by around 19 basis points.
Okay, Somit, thank you so much for that update this morning. But let's move on and go back to Ashesha again. She's here with us to tell us what the brokerages are saying this morning. Which are the stocks that brokerages are keeping on their radar? Ashesha?
Well, yes, first up, the cement sector will be in focus, and that is because the JP Morgan report has come in on the cement sector, where they say that they continue to remain cautious on the entire cement space. They see risk reward increasingly unattractive, at least for the near term. In the near 3 to 6 months, they believe that the risk reward is pretty unattractive. As far as the gas and coking coal prices are concerned, they've likely bottomed, and hence the companies will not enjoy any margin expansion going forward. As far as valuations are concerned, they say
stocks have not sustained at the current valuations, which trade at about 1 standard deviation on 1 year forward EV to EBITDA. So they remain cautious, and on account of this JP Morgan note that has come in on the entire cement space, these stocks will be in focus today. Moving on to Paytm there, where Bank of America Securities has come out with a note. They are maintaining their buy stance on the stock, but they have increased their target price from 885 to 1085 per share. They say they expect Paytm's margin improvement to happen at faster as compared to what was anticipated earlier. Momentum in high margin lending and soundbox business is expected to sustain at the current levels. And as far as the key risk is concerned, they say higher than expected competition from BharatPe and Reliance Industries Jio Financial Services will also be a concern. For now, they maintain their buy rating on Paytm, but they've gone ahead and increased their target price to 1085 rupees per share. Moving on to Bajaj Auto then. Over here, JP Morgan has come out with a note where they are maintaining their overweight stance, but they've hiked their target price from 5,380 to marginal increase in target price to 5,400 rupees per share. They say Bajaj Auto remains one of their preferred picks in the entire auto space, likely bottoming of two-wheeler and three-wheeler exports, domestic two-wheeler recovery, and EV volume pickup is why they are bullish on this counter. Lastly, we'll also talk about a report that has come in on Accenture results and its impact on the Indian IT sector. Jefferies has come out with a report where they say that Accenture Q3 results is a negative read-through for the Indian IT stocks. Sharp moderation in bookings growth and even outsourcing suggest rising scrutiny in Indian IT trends. They say muted outlook for North America and CMT could pose risks for LTI Mindtree, Tech Mahindra, Infosys and HCL Tech. So on account of these reports that have come in, all of these counters will be in focus today.
Alright, thanks Shesha for all those details. Keep an eye out on all these stocks in trade today. But as we wrap up with this edition of Market Cafe, we've got Mehta, who's the director at Elixir Equities, and he believes that the Sensex will hit the 1 lakh mark in the next 3 years. He also believes that investors can expect 15 to 20% returns, and also listen into all the stocks that he's keeping on his radar. With that, it's a goodbye from me as well as Vinny and the team that put this show together.
I guess I would say a 1,000-day target, so about 3 years or so to reach, maybe earlier as well. You keep in mind that Sensex is a 30 large companies and they are mature businesses, large base, so it takes a while for them to generate that kind of return to take the Sensex up to 1 lakh. But I think at this point of time, investors can easily expect about 15 to 20% type of returns compound over the next 2-3 years or so. That's assuming there is no negative factor, there are no geopolitical events and there are no accidents. But save that, I think we are on a very strong wicket over here and we should be able to build on these gains which we have seen in the last few months or so. And typically I think we are moving out of a very narrow range after almost 6 months. So once we convincingly cross the previous high, go to that 19,000, 65,000 level for the Sensex, I think you will see a lot more trading interest. And you will see maybe a lot more leverage interest as well, but that's part and parcel of the whole market and that can drive the markets higher.